Hi, Calvin. Thanks for joining us. How are you?
Hey, I'm good, Roshan. Good afternoon to you.
Awesome. I'm excited. Yes, just like Calvin said, I'm Rashawn Gidwani, Phillip Capital's media host and presenter. Today, Calvin is with me to discuss how Nikko Asset Management Asia is proud to list their first thematic exchange traded fund on the China electric vehicles and future mobility sector on the Singapore Exchange on the 20th of January, 2022. Calvin, who's with me today, is the ETF Business Development Director at Nikko Asset Management, and he's responsible for driving the growth of Nikko Asset Management's ETFs business in Southeast Asia. A key component of the Global Climate Change Initiative, electric vehicles and future mobility is one of the fastest growing technology sectors in China. We see a powerful confluence of policies, tailwinds, and rapid supply side innovation taking place. Before we begin, I'd like to provide some context. The number of electric cars has jumped fivefold from 2 million in 2016 to cross 10 million in 2020, according to data compiled by the International Energy Agency. Despite the COVID-19 pandemic fallout, the number of electric car registrations in 2020 continues to increase in major markets. The development of the battery-powered electric vehicles is one of the main catalysts driving the expansion. Battery-powered electric vehicles accounted for two-thirds of the new electric car registrations in 2020, with China having the largest fleet of 4.5 million electric cars. All right, Calvin, let's kick off.
Sure.
Some market observers believe that growth expectations in 2022 will be low. Do you agree or disagree?
Well, I will agree that growth in 2022 will likely be lower relative to the past 2 years. This is primarily because the equity markets were recovering from a low base, in the aftermath of the COVID-19 crisis. As an example, with the STI Singapore back to pre-COVID levels, the base effect will diminish. In fact, the broader Asia as well as global equity market have recovered back to above pre-COVID levels. China is interesting. They were among the first countries to recover from the initial COVID wave. The Chinese equity market recovered strongly and quite quickly, but they have recently corrected on issues coming out of its housing credit market as well as its technology sectors.
Can you describe some current market conditions such as Fed balance sheet reduction and how we'll be adjusting to the new normal when that arises?
Yes, sure. The good performance in global equity markets have been accompanied by rising inflation expectations. As a result, the US Fed is expected to raise interest rates up to 4 times this year, as well as commence on balance sheet reduction. The ECB, the European Central Bank, also plans to roll back its $2 trillion of pandemic emergency purchase program, in short PEPP, this year too. And the new normal here is that bond yields, as well as the funding costs for companies, may rise further and drain on market liquidity. This is going to be a measured process, but it dampens market sentiment. As such, we believe that investors will become increasingly selective in looking for growth. Against such a backdrop, the China EVFM sector may provide good opportunities.
Coming back to Nikko Asset Management's new EVFM ETF, what is so electrifying about electric vehicles?
Well, it's not really investing in the ETF. It's not really just about the electric vehicle. It's really more about future mobility. This is a thematic ETF together with MSCI, the index provider. The ETF is designed to give investors exposure into 5 key themes in the China EVFM space. Namely, they are 1, batteries, 2, smart mobility, 3, the sharing economy, 4, high-speed transport, and 5, vehicle automation. Each key trend extends into multiple value chains. It is electrifyingly exciting.
Can you tell us more about these value chains, Calvin?
Sure. One of the value chains is battery development. The roadmap here is hugely diverse. For example, adding silicon to the anode of the EV batteries, using lithium metal batteries in solid state form, or simply going cobalt free are all possible routes up to higher energy densities. On the other hand, sodium ion batteries can replace lithium ion and potentially open up entirely new battery chemistries at much lower cost. Another value chain is vehicle automation. Here, the driverless car essentially needs to know two things: where it is and what is going around it. Artificial intelligence have been a key enabler of this and is seeing real progress, especially in the area of image recognition as well as remote sensing. And if we apply this to another vertical of taxi sharing, this is also a massive value chain. The amount of electronics as well as software that is required to run this efficiently and safely in the case of autonomous taxis, even on the scale of a small city, is quite mind-boggling.
What are some key trends and policies driving the China electric vehicle and future mobility sector?
On the policy front, the State Council blueprint released in November 2020, as well as the 14th five-year plan, both of them have provided important direction for the China EVFM sector and for the next 10 years. Not only has new energy vehicles been highlighted as a strategic emerging industry, there are some clear targets for EVs to account for 20% of new car sales by 2025. It's just another 4 years away, and 40% by 2040.
Impressive. For the ETF, why focus on China rather than the global EVFM market? Where are the opportunities?
I'll say that although the ETF focuses on Chinese companies, the opportunities are global in nature. Chinese EV manufacturers have historically seen more success in their own domestic market, but we think they will increasingly become more export driven. A China focused ETF also kind of narrows the investment objective. We believe China has the ingredients to grow as well as lead the EVFM industry. The country has supportive government policies, a large and technologically receptive consumer market, as well as broad and deep manufacturing capabilities. This will lead to value creation for investors.
So, Calvin, I'm going to tell everyone how they can subscribe to this ETF. The ETF's initial offering period has started from the 3rd of Jan, 2022, and investors will be able to apply through the various participating dealers, including Philips Securities. For Philips Securities customers, you can apply online using your POBS trading account. The closing date will be the 13th of January, 2022, 5 p.m. And the listing will commence on the 20th of January, 2022. You can apply from 1,000 units onwards, and the allotment will be in full. Meanwhile, you can find more information on the application on POM's website. Alternatively, you can contact your trading representative, visit the nearest Philip Investor Centers for further assistance, or email us at etf@philip.com.sg if you have further inquiries. Thank you so much, Calvin. We'll catch up soon and discuss the growth rates as well as demand in the future. We wish Nikko Asset Management a successful ETF listing ahead. Thanks again, Calvin. Take care.
Thank you very much as well, Pran.